Thank you for joining us for episode 104 of Northstar's Private Equity Fast Pitch. Our host, Jeff Henningsen, president of Lockton Companies in Texas, will be speaking with John Huhn, a managing partner at the Compass Group. John has a 30-year track record of success in private equity, entrepreneurialism, and strategic consulting. Over the course of his career, he has been involved in more than 75 transactions, representing over $3 billion in enterprise value. Prior to founding Compass Group, John launched and led HBM Holdings, a family office focused on diversifying its core holdings. Today they'll be discussing how shifting to a helpful mindset makes you a superior investor, why being a giver, not a taker of time, is one of the most important career decisions, and how sacrificing a good relationship is a bad financial decision. And now your host, the podfather of private equity, Jeff Henningsen.
John, super excited to have this opportunity to talk to you today and would love to get this kicked off. Have you tell us a little bit about yourself and your firm, and we'll get moving.
Appreciate you for having me, Jeff. Thanks so much. Yeah, just so people understand me a little bit personally, I live here in St. Louis with my wife, Robin. I have two sons, Will, who's 25 and making a name for himself in the business community, living in Atlanta. And then my younger son, Jack, just graduated from high school and is off to college. So we're going to be empty nesters going forward. So good thing that as a whole family, we play golf and ski and travel. So I'll get to do maybe a little bit more of that now that my boys are out of the house. As far as Compass Group, I can tell you a little bit more. Compass Group was founded in a little bit different method than some private equity firms. My background is a little different as well. I'm entrepreneurial. I have a degree in engineering. I'm in my 50s, so I have to remind people that there wasn't Excel when I was going to school. I'm not the finance or M&A junkie, but over time became more and more involved with M&A through consulting first, and then corporate development, and then running a family office. And in that period of time, really just came to love the transaction, but also being able to see it through to the other side, something I missed in some of the corporate development world. I work for a publicly traded company. You acquire a business and turn it over to the operating partners, and then you'd wonder how it did after that. Founded Compass Group really on that background in 2015, where I always thought it was odd that as I worked in corporate development, we knew exactly what we were buying. We had a desire to get to a certain geography or certain technology or certain capability, whatever it was. We knew what we were buying and why we were going to buy it. We knew what we were going to extract from it or what we might lend to that business to create value. And we would, of course, bump up against private equity firms that would say things like, looks like good growth and good margins, we'll buy it and figure it out. And so when Compass Group was founded, it was all about being a true thematic firm where we aren't agnostic. We work in specific areas and we go about learning an industry. And when I say learning an industry, researching an industry, sometimes even commissioning research, going to the trade shows, the conferences, really working hard to immerse ourselves in an industry, sometimes for years, before we have a target list of companies and do our best to find proprietary opportunities in that space. And in doing so, we launched Compass Group. We're focused, as I mentioned, in a couple areas. One is business and consumer services, and the other is manufacturing and distribution. And so while those are some big buckets, we research subsectors to develop our theses underneath that. We're also focused in a geographic region. We say mid-America or between the mountain ranges. Being based in St. Louis, that's very helpful for us. We like to be face-to-face with our portfolio and potential partners. And even during the pandemic, we would travel and do our best to get face-to-face. And we just seem to resonate well with Midwesterners, being that's our background. And so we're out looking for founder-owned businesses where we're the first institutional capital coming in, and they are rolling over equity with us. So we're true business partners. And the way that makes a difference for us is that when we go to the market and we talk to a potential seller, we're talking to them about the strategy we have to build a platform in the space, what we've seen in the macroeconomics, what we understand in their particular space or sector. And that sometimes is very different, stands in stark contrast to some of the other private equity firms, not to critique any of my brethren, but other private equity firms who might send a letter or send a phone call and say, are you available for sale? And if so, what do you do? What do you make? And who are you selling it to? And that's important because we're asking that individual to roll over equity and partner with us. Of course, they need to feel like we can bring value. And if we've done our job researching over a period of time, we might have bolt-on acquisitions already in the hopper. We may have executives that could join and augment the team. We may have value-added board members that could come on board. So that's how Compass Group goes to market. And we've been very fortunate to have built our first portfolio, recently raised our first commingled fund, but we call that Fund 2 since we already had a portfolio. And as a result of all that, have built a really great team too. We're excited about where we stand and appreciate you having a chance to tell our story.
I resonate with between the mountain ranges. I was born in Missouri, raised in Nebraska, went to University of Missouri, spent a lot of time in St. Louis while I was in college. Definitely understand the DNA of the Midwestern, and I feel like I'm still a Midwesterner, even though I moved to Texas in 1990.
Absolutely.
Tell me a couple things: size, where are you oriented there, and the type of deals that you're doing, and then from a equity perspective, you're doing something that I've heard other people say, you kind of giving that entrepreneur the second bite at the apple. Nice equity check now, but really the big opportunity is what they do next with you as their partner. Tell us about that.
We're looking for businesses 2 to 12 million in EBITDA. So you can imagine that, of course, is a pretty broad enterprise value as well. We have a $255 million new fund. And so our goal is probably to write an average check around $20 to $25 million, leaving some room to do bolt-ons. We do a lot of bolt-on acquisitions. We also have some roll-up style businesses as well. When we talk to a seller about partnering with us, we want them to still have fire in the belly and want to be able to grow that business further. And our story is that we'd like to have the second bite at the apple bigger than the first bite at the apple. So if they're selling, call it 70% and rolling 30%, that second bite has to be 3 times the size of the first one. And so that really becomes our hurdle. And we have a playbook of value creation activities that we bring to the table that we try to walk our businesses through, call it a checklist. Not all applies to all businesses, but we think through them all. And as a result of that, in our first 8 transactions and 5 exits, we've been able to generate north of 100% IRR and north of 6 times cash on cash. And that, of course, helped us raise the next fund. And of course, I can never promise to repeat those numbers, but we have others in our portfolio that are already performing along those lines. And so we think our model's working. And of course, that's attractive to sellers who want to build a business to the next level. We talk a lot about taking the handcuffs off. What I mean by that is there's always reasons that entrepreneurial owners don't push further, right? They're personally guaranteeing a loan. They can't afford to put CapEx in place or hire new staff members. They're nervous about sharing the management responsibilities, whatever it might be. We talk about, if it was our capital, what would you do if you could do all of those things at once? Or how could the business perform if you didn't feel limited in some way? And it's really amazing when you sit down and have a strategy session about all the things they could do, prioritize them and say, now if capital wasn't the limiter or nervousness or personal guarantees weren't a limiter, what can we do? And that's really how we try to take these businesses to the next level of commercial success.
So beyond capital being a potential limiting factor, what other things as an entrepreneur are you bringing to me that maybe I'm not even aware of that are limiting me in growing my business?
Yeah, so some of the things that I think are quite natural for private equity firms, but are new for an entrepreneur is a board, right? Having a group of individuals, and in our case, not that are going to beat you up on a quarterly basis, but are going to be thought partners with you to hold you accountable, to grow the business together and really take on some of those responsibilities. We like to call ourselves operating partners, not financial engineers. So we're not going to sit back and say, you should be doing. We'll sit down and say, what can we do together? And what part of that might we assist with? And so Compass Group has something called Compass Guides, which are functional experts. Consider it like shared services where HR and digital marketing and legal and technology transformation, those are resources that we lend out to our portfolio of companies so that they don't have to bring on those expensive resources in their overhead. A strategy is another. It's amazing how many times somebody can enunciate what they're trying to accomplish, but they don't have a strategy written down of how they're going to do that. Along those lines, the metrics or the KPIs that a business would to look at. And so when we put a board deck together and a board of advisors that are thought partners and a written strategy, and then we go hard charging after it hand in hand with them in partnership, we've been really able to get these business growing. For example, a recent acquisition we made just 6 months ago, the TTM EBITDA is already up 30%. And they're amazed and we're amazed, but I really think it's just a matter of working together to put gas on the fire, as they might call it.
The industry targets that you're focused on are pretty broad. Do you have any particular areas of thesis that you're beginning the process of understanding and looking for what your next move might be in those particular buckets?
I agree with you. When we tell people we do manufacturing and distribution and business and consumer services, they're like, that's pretty much all of it. And I might smile and say, sure, but we don't do consumer products or real estate or high tech or biotech or restaurants or retail. There's a lot we don't do, but I agree those are big buckets. And so within those buckets, we drill down further and we have a variety of different subsectors that we're exploring. One is something we call advanced materials, and that would be things like coatings or chemicals or ingredients, food ingredients that the commodity doesn't change, but the ingredient might make that product better, like UV resistance or strength or weight or whatever it might be. So that's one area that we've spent some time looking into. We like the business process outsourcing models as well. How can somebody stay core to what they're strong at and have a business partner that provides them other services? And so we have a couple things that we're working on in that regard. We've had great success in the physician practice management space, and we continue to explore that as well. These are not secrets. Other firms are doing it. The macroeconomics support them, but we really try to drill down to be very specific about one target thesis, and then we go out and hunt them down, oftentimes making a list of 75 or 100 companies and doing the hard work of cold calling and writing letters and accidentally bumping into them at trade shows or conferences, et cetera. So we act a little bit more like an investment bank that's trying to immerse themselves in an industry than a private equity firm that's swimming around at a broad level.
Seems like many of the industries that you focus on could have supply chain issues that everybody's been dealing with. How are you dealing with that particular area?
We've been fortunate on the service side of the house. It's a labor issue, right? And so we spend some time working on automation, et cetera. But the supply chain, if you call it that, and labor is certainly becoming a challenge. And all businesses are facing that. On the manufacturing side, we've been fortunate that we haven't been wildly disrupted by supply chain. Certainly, some of our vendors and OEMs had some impact, and as a result, that trickles down to us. We did have an electronics business that we sold last year. Perhaps that was prescient to be out of that, and that business was starting to see, and I think probably experiencing more disruption now. But we've been pretty fortunate not to have real dramatic impact. In fact, some of our business is interesting. COVID, a little different than the supply chain, but COVID has helped. We have a veterinary business where it's done very well. We've made 140 acquisitions there in 3.5 years, and everyone went out in COVID and bought cats and dogs. So that business is booming and doing very well.
That's fantastic. So I've actually never heard anybody refer to labor as supply chain issues, but private equity firms I talk to are all dealing with that as well. And particularly in the lower middle market, people are really, really important. Not that they're not important at all levels, but the smaller firms, you have a very small number of folks doing things. So losing one of them or having open spots probably can be very materially impactful because you don't have as much bench strength to pull on. How do you approach that in the portfolio that you work with?
That's certainly the case. And when we go out to market and try to build a relationship, it's super important for us to have great trust and respect because, as I said earlier, we're going to be business partners with these sellers. And so while the economics have to make sense, right, that they're not going to undercut their value, but they also have to like us and we have to like them because we're going to be business partners together. And it's not uncommon for me to hear stories, I'm sure you have as well, where someone sold their business, but they really didn't like their new partner. And after a certain number of years, they resigned or moved on. That just tears at my heart to think that somebody would sell their baby, right? This is a business they probably built and grew, and that they come to the conclusion they'd rather walk away from it than stay with their partner. And so we work really hard on the relationship. We work really hard to build that trust. We have to have trust with our partners so that they're comfortable with us going forward. That might mean that we have to have a difficult conversation with them, but they trust us to treat them fairly. We need to have candid conversations with individuals in those organizations, and they have to have a trusting relationship with their teams as well. We always encourage early on in a transaction, after we get a business under LOI, let's talk to the broader team. This should not be scary. We're going to build and grow this business. We're not cutting heads. There's going to be new opportunities for individuals to grow. And in doing so, we try to build that trust with the expanded management team right out of the gate, as opposed to waiting until the week before the transaction to, make the announcement internally that this is going to go on, and nervousness or people are almost shy that this is a difficult thing that they're going to go through. Where if we can partner with them early on and build that trust, it makes a big, big difference for us. And we found that to be really important. And I say all that to maybe answer your question, which is, if you have that type of trust, if you're building and growing a business, if they can call you and know that you have their back, that cultural side of things, retention rates go through the roof versus those businesses that look at labor, and I feel horrible, but look as labor as a supply chain issue. Those just aren't sticky employees, right? There's much more to a business than just the job. And if you have that cultural fit and trust, I think that is a big lever in your corner to deal with what's going on in the market today as far as labor.
No, absolutely. I feel like if your employees feel like they're more than just employees, if they're part of family, then it definitely creates an environment that people want to go to, particularly folks that have gone through several different corporate jobs and they're kind of in their maybe late 30s to 40s and they've experienced less friendly environments. They tend to gravitate to more caring culture. Speaking of employees, Jonathan Babcock is the reason that we're talking today, although you and I have known each other since 2012, 2013, I think was the first kind of time that we met on the North Star circuit and maybe ACG as well. I'd gotten to know Jonathan, one of your new younger associates, and he hooked us up to do this podcast. Tell me about advice that you're giving to young professionals and college students that are coming to you, maybe high school kids, friends of your boys. What are you telling them right now as it relates to career pathing, and particularly if they want to go into investment banking or private equity?
It's interesting. At a high level, of course, my son is just a couple of years into the work world, so I spent some time thinking about this, and Jonathan is a great example of this, I think, and that is to do something you love, right? Some people feel like they're needing to earn a good living or do what their peers are doing or their college classmates were focused on. But I think we all know that we spend more time, at least of our waking hours, at the office with our work colleagues than we do with our family. Therefore, you better like what you do. And if you get paid to do what you love to do, that's going to make for a much better career. And I don't expect individuals coming out of college to necessarily know what that is. But I have people sometimes ask me, should I explore something new? And one of my sayings is, you don't have a decision to make until you have a decision to make, right? So sure, go explore it. If in exploring that, it turns into a job opportunity, weigh whether or not that seems more exciting and more fun than what you're doing today, and then find something that you truly love to do. I think that's difficult for a lot of individuals because of uncertainty in the market, and change is never easy. But I'm a big proponent of finding something that you love. If they love private equity and they love investment banking and they want to get into this world, I think the challenge is getting the reps, right? Everyone gains by doing multiple deals and seeing multiple structures. And as a result of that, they build a database in the back of their head that they can call on the next time. I say the same thing, though, to do something that you love, but also get smart about something you love. Our thesis work comes in, which is become more knowledgeable about a specific area than anyone else, and you will create more value for yourself, whether that be in a firm that you have specific knowledge about a certain industry or a certain technical skill, or as a lawyer working in certain areas. But if you become the subject matter expert in your resident area of knowledge, that's where real value comes from. And hopefully that's an area that you really love as well.
I don't think I've mentioned this on any podcast yet, but I think a lot of young people and even not young people have the tendency to say, recognize me, reward me, promote me to where I should be, as opposed to oftentimes I see people who are growing in their career are actually doing the job that they want before they've actually been recognized or promoted to be that person. And it's a really hard thing to think about. In a job, you want to do the job that you were hired for, but you also need to be thinking about doing some of the work that you aspire to. And that eventually takes work off of your boss potentially or somebody else. And then they say, oh, you should be doing this. Any thoughts on that?
Years ago, someone told me that people will either take your time or give you time. I think everyone should aspire to give time back to someone they work with, right? It doesn't have to necessarily be their boss. It could be a colleague. But if you are a drain on the organization's time because you're only asking questions, only asking for input, that should be a red flag for you and the organization. And that if you're an individual thinking about a project or working on an initiative within an organization, how can you take on more of that work, demonstrate your ability to help, go above and beyond, right? I have a saying, in fact, my friends here put it on a mug for me, it's so what? And so people will come in and report a whole lot of information and I'll say, so what? And that's my way of saying, turn that information into action. So what are we going to do about that? What are you recommending? And a different way of doing that is when you send an email to somebody with 6 attachments and say, please give me your thoughts. That's taking somebody's time versus sending those 6 attachments. You've reviewed them all, and then just putting a few bullet points saying, based on my review, this is my recommendation. Here's like where we think we should go. That's the so what. And I think that is a real eye opener for some of the younger folks to say, when you join an organization, don't just codify data, turn that data into information. And so you're saving the organization some time.
Well, what I love about that as well is it actually teaches you, if you're synthesizing information and giving an opinion, then when it's delivered to somebody like you, who's a senior professional, who's seen a lot of different things, and you say, okay, I see your view, but here's how I view. And then you start to learn how other people view things as opposed to just letting you drive the bus and I'm a passenger.
That's right. It has become helpful for me in my career to remember that I should be doing that, but I think it's helpful for others. And again, the repetition, or reps as we call it, is what is difficult for a young professional to have, right? And I'll be honest, that's why investment banking, I think, is a great career starter, because you see a lot of reps, you do a lot of deals, you see a lot of things, where if you're in the private equity world, it may take you 3 to 5 years to get one rep, to acquire a business, work on the business, sell the business. And it takes a lot of years to do that multiple times to have a good library of data.
That was really insightful, because I don't think I've gone down that talk track with any of my guests on the advice to college students, young professionals, talking about how to differentiate yourself and learn and actually synthesize data. I thought that was really beneficial. You have any favorite quotes, mottos, or what gets you up in the morning and drives you?
Yeah, listening to your podcast, I knew that question would come up. And I listened to a version from quite some time ago that I really love. So I want to just keep spreading it. I'll give credit to whoever it was. But the learn, earn, return. And just to be able to think through that and say, hey, in your early years, absorb all you can and keep learning. And then during your, call it 30s and 40s, you have that opportunity to really earn. And I'm now in my 50s and hoping that I can begin to return and give back. And so I just think that's a great mindset for a lot of people to have. But knowing that I'm stealing that one from somebody else, I was thinking about it a little bit. And there was one that I came across recently that I really like. And it's by Stephen Ross, who I think is involved with real estate development. But his quote is a little bit long, so I'll read it. There are those who work all day and those who dream all day. And then there's those who spend an hour dreaming and work to fulfill those dreams. And then I love the last part, put yourself in the third category because there's virtually no competition. We see that, right? There are workers in the portfolio companies that we have who are just grinding it out. And then there's thinkers that, are philosophizing about things all day. But man, if you can combine those two to put that strategic plan together, to put that thought together, and then go out and make it happen, there's little competition to be able to do both.
It's interesting you say that because we talk a lot about that in my universe that I'm involved in, that it's really fun to create and to think about new things to do. It's really, really difficult to execute over a long period of time. Where I see the most successful entrepreneurs, the most successful salespeople are the people that come up with a pattern and make it repeatable for a long, long time, because it takes a long time to build the snowball into something that actually generates the results that you dreamed about way back when. And most people lose steam. I think that's a great quote. I love that. And Clay Hunter, episode 3, was the one that quoted the one that you were mentioning earlier. And I'm going to have him back on the podcast soon. So he's a local St. Louis guy now.
Yeah, back to St. Louis recently. That's great.
That's right. That's right.
That's way beyond his age and wisdom, I tell you. But
he gave credit to somebody else on that one. I remember the reference to it, but his was a fantastic podcast. And he was one of my early arrow takers in this quest of doing podcasts, which now is tipped over 100 episodes. I've really enjoyed this discussion today. I think that our audience is going to very much enjoy the knowledge that they gained about your firm and where you're focused. It's quite a bit different than a lot of my guests who are in the higher EBITDA world and more institutionally type focused. As my final question, I'd love to have you just give some thoughts around, if I'm an entrepreneur and I'm looking for that first institutional capital, that partner, as you said, I'm probably getting a ton of calls from investment bankers and other PE firms. How do I even differentiate that? And if I've gotten down the road where I think I'm going to actually make that move, what are the key things that you want me to think about as I make that decision about you and your firm that would tip me in your direction?
That's interesting. This probably will sound odd, but I would tell that entrepreneur to think that it's not about the dollars, right? Of course, they're selling their business. It's all about valuation and all those types of things. But in the long run, the market is relatively efficient. Value is pretty well understood. I think most suitors will be in the same ballpark. As I talked earlier, it's much more about the personal relationship, the who do you want to be a partner with, the ability to work together and trust each other. I think those are the important things for someone to think about so that they don't find themselves in a situation where they got an extra $1 million, which might only be a few percentage points, but now they're in a relationship that isn't enjoyable. And most of us like business and like to be in business, and that's why we built the business. And it's just as important to make sure that you find somebody you still enjoy 3-5 years down the road.
John, I really appreciate your time today. It's been great catching up and look forward to staying in touch over the years here.
Yeah, thanks very much. Thanks for having me on, Jeff. Take care.
Thank you for listening to North Star's Private Equity Fast Pitch. For more information about Fast Pitch or North Star's boutique heavy hitter events, you can visit us at enorthstar.com.